JP Morgan, Citi, Wells, all out with results as we kick off the earnings season. Joining us to discuss today, UBS securities analyst Erika Najarian. Erika, great to have you. I was looking at your preview note that JPM and Wells likely the best of the lot. Is that what came to pass?
Yes, absolutely. And I think that, what's really going on here is JP Morgan and Wells have among the best deposit bases in banks. And thus, they're earning a lot more in net interest income. But I wouldn't necessarily extrapolate these results into next week as we get into regional bank earnings.
Yeah, that and also the investment banks. Sort of the color commentary around M&A was green shoots, but also headwinds. I wonder how you think that's going to play out.
Look, I think, similar to how investors are thinking about banks, a lot of corporates are looking around and saying, gosh, there's still so much uncertainty in the outcome. You guys talked about this at the top of your show. And I think that precludes corporates from really making decisions on whether or not to partner with other corporates. And I think that's why, a lot of these banks are hesitant to be more bullish about those green shoots in M&A activity.
Is your concern about the regionals centered around real estate or the rate environment right now?
Great question. So, Carl, underneath the surface of these great results, we're really a little bit of deterioration in commercial real estate for both JP Morgan and Wells Fargo. So for those balance sheets, with that earnings power, it's really not that consequential. But as we get smaller, and if we extrapolate those results, the CRE deterioration, a lot of these smaller regional banks may not have as much earnings power to absorb that. The other thing I would say is we're not quite out of the woods in terms of deposit repricing for the regional banks. Now, I think that's fully reflected into the stocks, but I think these are going to be the best in class with regards to net interest income outcomes because of the fact that JP Morgan and Wells have better deposit bases that have higher levels of transaction accounts that don't demand a lot of yield.
So, Erika, is this earnings season in a way, if you're right, going to sort of continue to widen that gap between our biggest banks and their performance, so to speak, and how they're rewarded in the marketplace versus so many of the regionals and smaller banks?
I think potentially, right? Because I think at the end of the day, the issue with the banks right now is that the sponsorship of banks from long-only investors is very limited to the largest of market cap. There's still a lot of, PTSD from what happened in March and April with regards to the bank failures. And given the uncertainty on the economic outlook, are we going to have a soft landing or going to have a hard landing? How much more does the Fed go? I think that precludes a lot of long-onlys from saying, okay, these regional banks are bargains at this point. So while we think that the net interest income headwinds and challenges are priced into regional bank stocks, what's missing is that sponsorship from the long-only community that wants to buy regional banks ahead potentially of a recession and a credit cycle.